Gold has been money for 5,000 years. Bitcoin has been money for 15. Guess which one is actually winning the race for your future?
Most people think the battle for your wealth is fought between stocks and bonds. They're wrong. In an era where central banks are printing trillions out of thin air, the real fight is happening between the physical past and the digital future. We are witnessing the ultimate showdown for the title of the ultimate store of value. Today, I'm going to strip away the hype and the heritage to give you the raw, cold truth about where you should be parking your capital.
Let's start with the heavyweight champion, gold. Gold is the Lindy effect personified. In finance, the Lindy effect suggests that the longer something has survived, the longer it is likely to survive in the future. Gold didn't become valuable because a government said so. It became valuable because it is chemically unique. It doesn't rust, it doesn't tarnish, and you can't fake it. It is the only financial asset that isn't someone else's liability. When the lights go out and the banking system freezes, a gold bar in your hand is still a gold bar.
Central banks know this. In 2023 and 2024, we saw record-breaking gold purchases by central banks worldwide, led by China and Russia. They are de-dollarizing. They are preparing for a world where the US dollar isn't the undisputed king. Gold is the ultimate insurance policy. It's boring, it's heavy, and it doesn't pay a dividend. But it has a 100% track record of outliving every fiat currency ever created. That is a fact you cannot ignore.
But then there's the challenger, Bitcoin. If gold is the analog version of hard money, Bitcoin is the digital upgrade. Think about it. We live in a world where we don't send letters, we send emails. We don't use physical maps, we use GPS. Why would our money stay stuck in the physical world? Bitcoin was designed to take the best properties of gold, scarcity, durability, and divisibility, and move them into the digital age. It is the world's first decentralized, borderless, and unconfiscatable form of value.
The math is what makes Bitcoin terrifyingly efficient. There will only ever be 21 million Bitcoins. Period. You can't mine more if the price goes up, unlike gold. If the price of gold triples, every mining company on Earth starts digging deeper and faster, increasing the supply and suppressing the price. With Bitcoin, the supply is fixed by code. It is the only asset in human history where the supply is completely decoupled from the demand. That is a structural advantage that gold simply cannot match.
Now, let's talk about the portability factor. This is where Bitcoin crushes gold. If you need to move $100 million across the world in an emergency, trying to do that with gold is a logistical nightmare. You need armored trucks, security teams, and government permits. With Bitcoin, you need a 12-word seed phrase memorized in your head. You can walk across any border in the world with $1 billion in your brain. In an increasingly unstable world, that kind of mobility isn't just a feature, it's a superpower.
But I'm not here to tell you that Bitcoin is perfect. It's not. Its greatest weakness is its strength, its youth. Bitcoin is volatile. It can drop 50% in a month. For many investors, that's a heart attack waiting to happen. Gold, on the other hand, is the sleep well at night asset. It's low volatility. It's predictable. If you are 70 years old and looking to preserve what you've built, gold is your anchor. But if you are 30 and looking to build a legacy, the volatility of Bitcoin is the price you pay for the highest performing asset of the last decade.
The real shift happened in 2024. The arrival of the spot Bitcoin ETFs changed the game. BlackRock, the largest asset manager in the world, is now one of the biggest holders of Bitcoin. This isn't magic internet money for hobbyists anymore. It's an institutional-grade asset. We are seeing a generational wealth transfer. Baby boomers own the gold. Millennials and Gen Z are buying the Bitcoin. As that wealth moves down the family tree, where do you think that capital is going to flow? So what's the savvy strategy? As your mentor, I'm telling you, don't choose. This isn't a team sport where you have to pick a side. This is about survival and growth. Gold protects you from the total collapse of the system. Bitcoin allows you to thrive within the new system. I call it the barbell strategy. Put your insurance in gold, physical bars, not paper certificates. Put your growth in Bitcoin, self-custodied, not on an exchange. By holding both, you are hedging against the death of the dollar while positioning yourself for the birth of the digital financial system.
The world is changing faster than the textbooks can keep up with. The debt to GDP ratios of major nations are at all-time highs. Inflation isn't a bug, it's a feature of the current monetary design. You are being taxed every single day through the debasement of your currency. Whether you choose the 5,000-year-old rock or the 15-year-old code, the only wrong move is staying in cash and watching your purchasing power melt away.
Wealth isn't just about what you make, it's about what you keep. Choose your store of value wisely, because the market doesn't care about your feelings, it only cares about the math. Follow for daily wealth-building wisdom.